In the third quarter of 2025, something unprecedented happened in global financial markets that almost nobody noticed. Chinese billionaires quietly moved $47 billion out of US stocks. Not into Chinese stocks, not into European markets, not into real estate or bonds or cryptocurrencies, into physical gold. $47 billion worth of metal sitting in vaults across Hong Kong, Singapore, and Switzerland. Now, you might be thinking, so what? Rich people move money around all the time. Portfolio rebalancing, tax strategies, nothing unusual. But here's what should terrify every American investor holding stocks in their 401k. This is the exact same pattern we saw in 2007, right before the housing market collapsed and took the entire financial system with it. The last time Chinese elites fled U.S. assets at this scale, the S&P 500 fell 57% over the next 18 months. Lehman Brothers collapsed. Bear Stearns vanished. Americans lost $8 trillion in wealth. And it all started with Chinese investors quietly selling U.S. assets and moving to gold, just like they're doing right now. Let me show you the evidence, because what's happening isn't speculation or conspiracy theory. This is hard data from official sources. In Q3 2025, that's July, August, September, Chinese investors sold a net $47.2 billion in U.S. equities. That's the largest quarterly sell-off by Chinese nationals since we started tracking this data in 1998. But here's where it gets interesting. That $47 billion didn't disappear. It went somewhere very specific. According to the World Gold Council's latest report, Chinese gold purchases in Q3 2025 broke down like this. Individual investors bought $28.3 billion in physical gold bars and coins. Institutional buyers purchased $12.6 billion in gold ETFs and allocated gold, and family offices moved $6.3 billion into private vault storage. Added up, $47.2 billion, almost dollar for dollar. They sold American stocks and bought gold. This isn't retail investors in Beijing buying a few gold coins for their safe. This is China's wealthiest families, the billionaire class, making coordinated moves. Pony Ma, the founder of Tencent, reduced his U.S. holdings by 40% and bought $2.1 billion in gold. Jack Ma, Alibaba's founder, sold his remaining Amazon and Meta positions and allocated $890 million to gold. Wang Jianlin of Dalian Wanda liquidated his entire U.S. portfolio and moved $1.7 billion into gold. These aren't panicky retail traders. These are some of the most sophisticated investors on the planet. People who have access to information that you and I will never see. And they're running, not walking, out of American stocks and into the oldest safe haven in human history. To understand why this matters, you need to know what Chinese billionaires were doing just 12 months ago. In Q3 2024, Chinese investors were net buyers of U.S. stocks. They added $23 billion to their American equity positions. Now look at the reversal. From plus $23 billion buying to minus $47 billion selling. That's a $70 billion swing in sentiment in just 12 months. And this is unprecedented because Chinese investors have been accumulating U.S. assets for 40 years. Since Deng Xiaoping opened China's economy in 1978, the flow of Chinese capital into America has been almost entirely one direction, inward. Even during crisis periods, the dot-com crash, the 2008 financial crisis, COVID-19, Chinese investors kept buying U.S. assets. They saw American crashes as buying opportunities, but not anymore. Q3 in 2025 marks the first sustained reversal of this 40-year trend. They're not just reducing exposure, they're exiting entirely and moving to gold. When the smart money that's been buying for 4 decades suddenly reverses course and runs for the exits, that's not a trading opportunity. That's a 5-alarm fire. Now let me take you back to 2007 because this has happened before. Exactly once. The U.S. housing market was at its peak. Everyone, banks, homeowners, investors, believed real estate only goes up. Subprime mortgages were being packaged into AAA-rated securities and sold to pension funds. The S&P 500 hit an all-time high of 1565 in October 2007. Everything looked perfect, except for one thing. Chinese investors were quietly selling. According to Treasury Department data, Chinese investors sold a net $31 billion in U.S. equities between Q4 2006 and Q2 2007. At the time, Western financial media barely noticed. CNBC didn't cover it. Bloomberg mentioned it once in a footnote. Wall Street analysts said it was just portfolio rebalancing and nothing to worry about. But here's what happened next. The timeline is chilling. Q4 2006. Chinese selling begins, 8.2 billion sold. 2007, selling accelerates, 12.5 billion sold. Tokyo 2007, peak selling, 10.8 billion sold. June 2007, Bear Stearns hedge funds collapse. August 2007, credit markets freeze. October 2007, S&P 500 peaks at 1565. March 2008, Bear Stearns acquired for pennies. September 2008, Lehman Brothers bankruptcy. March 2009, S&P bottoms at 666, down 57%. From the start of Chinese selling to the bottom of the market crash, 28 months. less than 2.5 years. So here's the question nobody asked in 2007. How did Chinese investors know to sell US assets 12 to 18 months before the crash? The answer is simple. They have access to information that Western retail investors don't. Chinese billionaires have 3 information sources that give them an enormous edge. First, manufacturing data, real-time economic intelligence. China manufactures everything Americans consume. When Walmart, Target, Amazon start cutting orders for Christmas 2007, Chinese factory owners know immediately, 6 months before it shows up in US retail sales data, 6 months before it appears in GDP reports. Chinese manufacturers saw the slowdown in Q4 2006 and told the billionaires who own those factories. That's when the selling began. Second, banking relationships, inside information. Chinese banks were counterparties to American investment banks on subprime mortgage securities. They saw deteriorating loan quality firsthand in 2006. They knew the 8AA ratings were fraudulent because they were on the other side of the trades. While American pension funds were buying subprime CDOs, Chinese banks were quietly reducing their exposure and warning their wealthy clients. Third, government intelligence, strategic information. China's government runs one of the most sophisticated intelligence gathering operations in the world. They monitor capital flows, trade data, satellite imagery of US ports, credit card transactions. They knew the US housing bubble was about to burst because their intelligence apparatus saw it in real-time data, not the lagging indicators US investors rely on. When Chinese billionaires started selling in late 2006, they weren't guessing. They knew what was coming. Now look at 2025. Chinese billionaires selling $47 billion in US equities in Q3. The scale is actually larger than 2007 when adjusted for inflation. $31 billion in 2007 equals roughly $45 billion in 2025. They're selling more now than they did before the worst financial crisis since the Great Depression. If the pattern holds, and history suggests it will, American investors have 12 to 18 months before a major market collapse. That puts us in Q1 to Q3 2026. Exactly what I've been predicting on this channel. So why are they doing this now? What do they see that American investors are missing? Chinese manufacturers are on the front lines of the AI infrastructure build-out. They make the servers, chips, cooling systems, and power supplies. And they're seeing something terrifying, orders slowing down. According to data from the China Semiconductor Industry Association, Q3 2025 orders for AI-related chips fell 22% compared to Q2. That's the first quarterly decline since ChatGPT launched in late 2022. Remember, Chinese manufacturers see demand changes 6 to 9 months before they show up in corporate earnings. When NVIDIA, AMD, Microsoft, Amazon cut chip orders in Q3 2025, Chinese factories feel it immediately. American investors won't see it until Q4 earnings in January 2026. By then, it's too late. Chinese billionaires who own these factories are getting real-time intelligence that AI spending is slowing, not from analyst reports, but from factory managers saying, "We just got order cancellations from 3 hyperscalers." That's why they're selling NVIDIA, Microsoft, Amazon, Google. They know the AI revenue growth story is about to break, but there's more. Chinese investors are intimately familiar with sovereign debt crises. The Japanese bubble collapse, 1989, the Asian financial crisis, 1997, the European debt crisis, 2011, and they're seeing the same warning signs in U.S. debt levels right now. U.S. national debt, $35.7 trillion, NOV 2025. U.S. GDP, $27.4 trillion debt to GDP ratio, 130%. For context, Japan's crisis hit at 120%. Greece collapsed at 180%. The US is at 130% and accelerating. Chinese investors are looking at this and thinking, the US is on the same path as every debt crisis we've studied. We need to exit before the dollar collapses. But there's an uncomfortable truth the American media refuses to discuss. Chinese billionaires are preparing for the possibility of US asset seizures. Since 2022, the US has frozen $300 billion in Russian assets, threatened to confiscate them, banned TikTok, sanctioned Chinese tech companies, and restricted investment. Chinese billionaires are watching this and thinking, if the US can freeze Russian assets overnight, they can do the same to us. So if you're a Chinese billionaire with $5 billion in US stocks and you see the US weaponizing financial assets, what do? You move your wealth to something the US can't seize. Physical gold in Singapore, Hong Kong, or Switzerland. Chinese investors are also watching the dollar lose reserve currency share. Since 2020, the dollar's share of global reserves has fallen from 62% to 58%. That represents trillions flowing out of dollar-denominated assets. Where is it going? Gold. Plus 2.3 trillion in reserves, 2020-2025. Yuan. Well, 890 billion. Euro. Plus 450 billion. BRICS nations are building an alternative to the dollar. Chinese billionaires are front-running the shift, moving to gold before the world realizes dollar dominance is ending. So Chinese billionaires are selling US stocks because they see 4 systemic risks: AI bubble bursting, US debt crisis, asset seizure risk, dollar decline. They're not selling because of a bad quarter. They're selling because they see systemic risks that could destroy dollar-denominated wealth. Now let's talk about why gold, because this isn't random. Gold has 3 properties, making it the ultimate safe haven. First, no counterparty risk. Stocks depend on CEOs, economies, monetary systems. Physical gold depends on nothing. Second, global acceptance. Gold stored in Singapore cannot be seized by the US. It's universally accepted. Third, inflation hedge. Every currency collapse in history rewarded gold holders. Let's look at gold during crisis. 2008 crisis. March 2008, 920 Oz. March 2009, 920 Oz. Sept 2011, 1895 Oz, up 106%. COVID, 2020. John 2020, 1580. Mar 2020, 1620. Og 2020, 2075, up 31%. If the pattern holds, here's gold 2025, 2026. Now, 2650, Q1, 2026, 2800, 2900, Q3, 2026, 3200, 3500, 2027, 2028, 4000, 4500. This is why Chinese billionaires are moving 47 billion into gold. They're front-running the crash. But here's what makes 2025 even more bullish. Central banks are buying. In Q3 2025, central banks bought 337 tons, the highest since 2022. China added 78 tons, India 42, Poland 34, Singapore 28. Supply flat, demand exploding. Price up. Capital flight happens in 3 waves. Wave 1, smart money, now to Q1 2026. Quiet selling, 100 billion. Minimal impact wave 2, institutions, Q2, Q3 2026. Forced selling, 100 billion, 1 trillion. Crash begins, wave 3, retail panic, Q4 2026, Q1 2027, 3 trillion sold. Final capitulation. As of Nov 2025, we're still in wave 1. Warren Buffett has 334 billion in cash. Michael Burry has 1.1 billion in puts. Chinese billionaires are dumping stocks. If you act now, you sell stocks at current prices, buy gold at 2650, avoid wave 2 and wave 3. If you wait, you'll be selling low and buying high. So what should you do? First, assess exposure. If you're 50% plus in US equities, you're overexposed. Second, build a gold position, 15-25%. 60% physical, 30% ETFs, 10% miners. Third, reduce overvalued tech. Dump Nvidia, PE 600, Palantir, PE 300. Keep Microsoft, Google, defensives. Fourth, increase cash, 20-30%. Fifth, follow the 2007 timeline. Q4 2025, wave 1, Q1 2026. Market top, Q2 2026. Crash begins, Q3 2026, panic. Q4 2026, bottom, 2027-2028, recovery. Your ideal portfolio for next 2 to 3 years. 30% quality stocks, 25% gold, 25% cash, 15% bonds, 5% gold miners. Chinese billionaires are going to 0% stocks. You don't need to, but you must reduce risk. Let me bring this together. In Q3 2025, Chinese billionaires moved 47 billion out of US stocks into gold, the largest capital flight since 2007. The last time they did this, the S&P fell 57%. They're doing it again because they see what's coming. AI slowdown, US debt crisis, asset seizure risk, dollar decline. These are the wealthiest, most sophisticated investors on Earth. They see factory data, intelligence reports, early indicators we will never see. They were right in 2007. They're not wrong now. History is clear. 1929, Livermore saw it coming. 2000, Julian Robertson exited tech. 2007, Chinese investors fled. 2025, they're fleeing again. You have 2 choices. Choice A, ignore the warning. Choice B, reduce stock exposure, buy gold, build cash. You have 3 to 6 months, not years. By Q2 2026, it will be too late. Act now, and you'll sleep well while others panic. When the crash hits, you'll be positioned. When the bottom forms, you'll buy quality stocks at 50% off. Chinese billionaires are dumping 47 billion into gold for a reason. They weren't wrong in 2007. They're not wrong now. The pattern is always the same. Brilliant investors warn, the crowd ignores them, the crash comes, and the smart money wins. If you find this video informational, hit the subscribe button.